My name is Rufus Kamau. I work with FX Pesa as a market analyst. I also co-host the Bullish Banter podcast. And what we basically do is basically look at global financial markets, look at what's happening. For instance, today we are talking about Trump in China. So we look at the things that are moving markets. We try to break them down into simple things that our traders and investors can use to invest and trade in Kenya and make some dollars for themselves. So, as for today, we will not be learning how to trade Forex. We will not be learning how to invest. But I'm going to give you a roadmap about Forex trading, and these will be around the same topic, whether Forex trading is a scam. So we'll walk step by step, right from the origins of Forex to where it is today. And then from there, hopefully I'll have answered most of the questions I've seen raised by the various groups already. So let's begin. This is about how a goat became a pip. Let's explain what a pip is, okay? So what's the current exchange rate of the USD Kenya shilling? 129.50, right? We have two decimal places, right? So if it moves to 129.51, that small movement is what we call a pip, okay? Are we in the same room? We all know what a goat is, right? So let's look at Forex trading. Fun fact, everyone in this room, nimeona Jesse ameuliza whether you have traded before. We all trade Forex, okay? You just don't get paid for it, right? So I'll give you an example. The last time you bought what? An iPhone, okay? Or a foreign-made phone, right? So whether you're using an iPhone, does Apple receive Kenya shillings in their books? So when you buy an iPhone and you pay with Kenya shillings, how does Apple get dollars? So the price you get quoted is a converted rate from the dollar, right? So you're basically trading Forex whenever you buy a foreign-made product, okay? Because at the end of the day, that company will receive a currency in their own country. If you're using a Chinese model, they will be paid in Chinese yuan. So second, have you ever received money from abroad? Anyone? Guys, you don't have to be ashamed. So if you have received money from abroad, especially directly to your M-Pesa, right? You have participated in some form of Forex trading, right? And in that case, you didn't get paid, right? That example, whenever you go to a petrol station and you fuel, right? Do we buy fuel in Kenya shillings? Do we buy fuel in shillings? So locally, you are getting a Forex quote. They are telling you 1 liter of petrol is this number of dollars, okay? But the rate you pay is this number of Kenya shillings, okay? So what ends up happening, you pay Kenya shillings, the oil marketers get the Kenya shillings, and then they go back to the same market, they convert Kenya shillings to dollar, then take the dollars to the Gulf to buy more oil, okay? So we are always participating in Forex, not something foreign. So when money was fiery, salty, or both, we said we are not going to define a goat, right? But it's fiery, right? Money was at some point very salty. I don't know if it's salty for you today. And by that I mean people would use salt as a currency, okay? And of course, sometimes it would be both. So if you've walked to a bank or a Forex bureau right here in town, okay? They usually have a board. So that exchange rate says 1 USD is going for this number of shillings, 1 Kenya shilling is going for this number of pounds, and so on, okay? And those numbers kind of flicker because they are moving, right? So back in the day, they would have a chalkboard in a market, okay? And that chalkboard would be 1 goat is going for 40 shells, okay? 1 goat is going for 40 seashells. So in that case, that was the Forex board. That was euro dollar, okay? So people going to the market, you'd either go with a goat or seashells. So if you have seashells, you're looking for a goat. If you have a goat, you're looking for seashells, okay? So there will be different currencies or items being traded on the market. So you would find something like one cow is going for 8 goats. So if you need goats and you have a cow, you'd go to the Forex board, you get the market rate, and then you'd find a buyer or a seller. Then one, let's say, bag of salt would be equivalent to, let's say, a one Roman soldier's salary for a day. So sometimes the exchange rate would be based on the labor you put in a day. So if a Roman soldier worked for a day, their payment would be worth something, okay? And then they would use that to buy other stuff. And some other exchanges were negotiable. For instance, if it's a rare guy selling a camel, then perhaps that would be negotiable, okay? And then they would do haggling, and maybe the buyer who has the best bid would get the day, okay? So next slide. So let's now take it a little bit faster. In this case, we will be moving from all the way back from 600 BC. If you're using salt and somebody lives near Magadi, siyo jamani billionaire, right? So that became a very big problem for currency traders. So if it's Seychelles and you have a guy from Lamu, they would just collect out of Seychelles and come take all of your goods, right? So they had to find something that is very rare for someone to find, or something that you would really work hard to get in order to find that item and use it to trade other things. So they went for the coins. So gold drums with a lion's head. Of course, we know that eventually those coins became portraits of dead presidents, right? Right? Have you seen a coin with a live president? Right? So they invented those coins, gold and silver coins, and now people would use them to trade for other items. So the complexity of trying to determine how much goat goes into a cow or how many cows will get you a certain number of goats, they invented the coins, and the coins became very popular. So they were universally acceptable. Wherever you go, if you just give those coins, they would be accepted. So then came what we call the Silk Road Indian Ocean trade. So this was the era of Genghis Khan, if you have heard of him. So on the Silk Road, it's a very long route running all the way from Asia through to Europe, okay? So those were trade routes where traders from Asia would take things to Europe, and traders from Europe would take things to Asia, okay? So along the way, because it's not a very good road, there is some places where there is snowing, some seasons when it's very dry, and they could not take the entire journey in a day. It would take several months. So after traveling for a bit, let's say you have traveled for a day on your horses, on your carts, once you get to a certain destination, a certain market, you'll need to resupply, okay? So if let's say you are a caravan of 100 people and you get to a certain market, by that time your food has run out, right? So you use some coins, you buy some food, you buy some clothing, some soap and everything. You also sell some of your merchandise. Remember, you're not traveling empty-handed. Some of those were silk traders, okay? Others were cotton traders. Others were live animal traders. So all these, including weaponry, they would use that on a caravan. So you get to this market, you exchange. You get to the next market, you exchange. And this kept happening for months and months. And that's how the Forex market expanded from one market to another. Now you'd have a very long market running across three different continents, Asia, Middle East, Europe, and in this case, it would involve a lot of people and a lot of goods being traded. So that was the expansion. Now comes the smart guys. Do you have sharp boys in the house? So the first sharp boys in Forex started in a country called Italy. Okay? So since the Silk Road would end up in somewhere in Europe, some of these guys, once they got to Europe, which was their destination after months and months of fighting, traveling, all these, they would seek some form of luxury, right? Somebody said that without Forex, luxury wouldn't exist. Yes? Forex enables luxury. Okay? Look at the luxury products in Kenya. How many of them are made in Kenya? Yeah? Guys, how many of them are made in Kenya? Do you think Bugatti accepts the Kenya shilling? Right? So how are you supposed to live a luxurious life in Kenya without getting involved in the Forex market? So medieval money changers were basically the first brokers in Forex, very fast sharp boys. So what they would do, they would set up benches in Italy, okay? Um, those were the first what we call the banker. A banker is basically a bench, okay? So on that bench, they would have different currencies. So after you have finished all your travels to Europe, once you get to the banker, then they would exchange coins for coins, okay? So if you collected some coins in Mongolia, you collected some coins, let's say, in Syria, you collected some coins in, let's say, another country, and then you get to Italy, then they would give you a currency that you can use across Italy and basically the entirety of Europe. So they would exchange currencies for currencies, and of course they would charge a fee, okay? That small fee, we call it a spread. So they would keep doing it over and over. So you wake up with your cash, you sell that cash, you buy more cash, and they would do that every day, every single day, and make money out of that. So those were basically the first bankers, okay? So if you've ever heard of the term bankruptcy, or somebody being bankrupt, it basically meant a broken bench, okay? It's not like they would physically break the bench. It's more like that bench doesn't have cash. Does it make sense? That's a bankrupt bench. So fast forward, the gold standard. So this is now after the First World War. So from the 1870s to 1914, every currency tied to a metal in a vault somewhere, boring, stable, and it actually worked. Your money is backed by gold, real gold in a vault. So this is what happened. So after the First World War, people were heavily armed, okay? Don't get me wrong. Any part of Europe, people would have guns, most people are soldiers, or people who had survived a war, right? So if you're moving, let's say, money from London to, let's say, Frankfurt, it would be very difficult because everyone is armed, right? So if you have some gold, if you have some silver and you need to move it from one physical location to another, you wouldn't be able to do that because of thieves, burglars, attacks. So it became very difficult to move money across distances, okay? So moving around with gold was basically a death sentence. So here comes the other sharp boys. We call them bankers, okay? So they came up with a solution. So for instance, for the guys in England, they came up with a bank, okay? They called it the Medici Bank. So on this bank, you would deposit your gold with them, okay? And this bank would be working with another branch, let's say in France. So if you need to move value between the UK and France, they would accept your gold and then they would write you a paper, a note that they would sign and stamp, okay? So using this note, if you go to the market to buy anything, whether it's a goat, a cow, or whatever you need to buy, people would accept that money or that paper because they trust the bank, okay? And once you receive that paper, you can go to France, okay? If somebody steals your paper, you can run back home and say, my paper was stolen, and your gold will still be there, right? But then, if you get to the other side with the paper, then you can say that I am the one that owns this paper and redeem this paper for my gold, okay? See now how people were able to move gold from, let's say, England to France without having to carry it physically. So that was the origin of banking notes, okay? So the notes that we have today operate the same way, except that the commercial bank, the central bank that you work with, they don't have the gold anymore, right? How many kgs does the CBK have right now of gold? Anyone? Yeah, it's 20. We have 20 kgs of gold on the CBK. Yeah, only 20 kgs. So let's get to the dollar. So we have survived World War I. We are still not dead. Now we are in World War II, and it's done. So Bretton Woods, 1944. Here comes the dollar. So the US, after becoming a superpower, they have defeated everyone. They have bombed Japan, Hiroshima, Nagasaki, everything is chaos. And now they say, now we are the big boys, we use our currency, okay? If you need your currency, you have to peg your currency to the dollar, okay? If you don't peg it to the dollar, we have the nukes, right? After what happened to Japan, nobody wanted to see the nukes in their country, okay? So we have the nukes, everyone uses the dollar. So for every other country that chose to have a currency, they would peg it to the dollar, okay? And that dollar was pegged at around 35 cents to an ounce of gold, okay? So the US would have the gold, okay? So for instance, France, they were conned. They put all their gold in the US vaults, okay? So that they could get dollars, okay? And then they could use these dollars to run their financial and economic activities. So at some point, everyone else in the world was using a currency pegged to the dollar. And at the same time, because some countries would go broke, because they couldn't afford the dollar, they created what we call the IMF, or the International Monetary Fund, and the World Bank, okay? So it's like, let's say there is a Shylock in the area, okay? But if you're too broke, they lend you more money so that you're more in debt to them, okay? That's the function of IMF and World Bank, okay? Or just in case we throw some bombs in your country, then we give the IMF and World Bank some cash to come and help you reconstruct. August 15, 1971. This is the big con, okay? So this is where it all happened. It was on a morning, and the US president then, Richard Nixon, did an address to the world, and he said, and I quote, "We are temporarily suspending the convertibility of the dollar to gold." Temporarily, okay? Remember how Uhuru said that they're implementing a lockdown temporarily for 2 weeks, right? Was it 2 weeks? Exactly. So right now it's been how many years? I think we are looking at 55 years since that temporary suspending the convertibility of the dollar to gold, okay? So after he suspended that, they eliminated the need to have gold backing a currency, and now they started just issuing dollars, okay? So what was actually happening, towards the end of the war, the Second World War, because countries, and I'm talking about European countries and the US, they needed a lot more cash to buy a lot more equipment, bombs, airplanes, and everything. They were printing more currencies than the gold they had at the vault. Does it make sense? So if, let's say they have, let's say 1 ton of gold, they would have to issue notes worth 1 ton of gold, right? Just in case anyone came to claim their gold, then they would have sufficient gold to cover the notes, right? So in order to win the war, they printed more notes and they had less gold. So if some guys organized together, let's say via Facebook, and decided let's go for our gold, they wouldn't find any gold. That's why they suspended that, okay? And then we got into this world of global Forex. And what this unlocked, currency started floating freely. A real deep 24-hour market was born, one where prices reflect actual supply and demand. And this is the market you can access today from your smartphone in Westlands. Next, why Forex is actually beautiful. Guys, to be honest, it's not that beautiful, okay? It could be beautiful for me and very ugly for you. So, it's the deepest market on earth, okay? So every single day, there is a lot of Forex trading activity happening, okay? So this is happening across all commercial banks. Every commercial bank in the world, they have a Forex trading desk, okay? So anyone sending money outside the country, remember every country imports and exports goods, right? So if, for instance, we are exporting goods, we are exporting coffee, tea, all that will come in foreign currencies, and then you can't spend foreign currencies in Kenya, so you need the Kenya shillings. So every country has that problem, and commercial banks are the agents of these transactions, okay? So they are the biggest participants in the market. So if you go to KCB, and let's say you want to send some dollars to Europe, if you go in the morning, your transaction might be a little bit slower. Usually, traditionally, they were doing it around 3, 4 p.m. They would do a bulk transaction and balance their books. So I don't know how they work today, but it's the deepest market on earth. Over $7 trillion are transacted each day, okay? There is no other market with such level of liquidity. And this makes it beautiful for us in that any kind of business that you can do in Kenya, if you think of anything, whether you start a club, whether you start a boda, a taxi business, whether you start an M-Pesa business, whatever that is, if that business gets 100 more people in the same area, you are all going to close, right? Or one person will win, right? The one who plays dirty, right? So if you get 1,000 more people in the same location doing the same business, are you going to close shop? So now the Forex market is different in that if 100 more people join, 1,000 more people join, there is enough liquidity for everyone, okay? So it incentivizes people to work together, okay? So the next trader trading on the next desk, the next chair, the next office, on your social media group, they are not your enemy, they are your partner, okay? Because if they make money and you make money, the market has enough for everyone. Does that make sense? And at the same time, if you lose money and I lose money, what happens? We all lose money, right? So it's an issue of what? It's an issue of what? It's a skill issue, okay? It's a skill issue. If you have the skill, if you have the determination, and you work together, you can all make money, okay? It's open 24 hours a day, 5 days a week. This is very simple to explain. At around midnight in Kenya, it's usually around 8 a.m. in Australia, okay? So this is when Sydney markets are open, their banks are open, okay? So they run their banks for, let's say, the normal trading hours, 8 to 5, right? So by the time their banks are closing, it's already morning in London, okay? So the UK guys are now trading, their benches are open, right? They continue running operations, and by the time they close, and this is Kenyan time, by around 5:36, the New York guys have already opened their banks, okay? So when the New York guys open their banks and they start trading, this usually happens around 4:30, 5:30, depending on DST. Then they run for their entire day, and by the time the Americans, the Canadians, the Mexicans are closing their markets, that's Kenyan midnight. The Sydney guys have woken up, okay? So this way, you can run transactions across or around banks for 24 hours a day, right? But then on weekends, we close, we take a break, and we go at least relax. That low capital to start, real upside. So for most of the investments in Kenya, it's very tough to start, right? So for bonds, it's 100K, right? They tried innovating around 50K. I don't think that worked. For stocks, we used to have minimums, but ZD is really reducing it. But then for Forex trading, you can even start with $10, $20, okay? So how did Forex get to your phone after all this happened? So we go back to 1980s. I think some of us can associate with the 80s, especially for guys who love music. So this was two banks shouting at each other across an ocean, okay? So we have already gotten to a place where banks can now trade currencies across board, right? So with the innovation of the telephone and the fax, they would be shouting at each other on the phone, Euro USD, we are selling at 1.345, sell me 10 lots. They would basically communicate that way to trade Forex, okay? And then at the end of the day, let's say at the end of a month, they would harmonize their books, okay? I sent you this amount, you sent me this amount, what's the balance? I owe someone in your country, give that money to them. They'll basically harmonize the books without ever having to move currencies across distances. Does that make sense? So fast forward, Reuters dealing on a screen, 1992, okay? So personally, I know a trader who started trading around 1992, okay? That was before most of you were born. And he's still trading today. So that's a real story. Here we get into the electronic stage of trading, computers. You trade with a keyboard, the wall starts to come down, okay? So up to that point, we started with where everyone would be trading openly in a market. People would be trading goods. Those are retail traders, okay? We got to a level where Forex was taken over by banks. The bankers, we got to banks using phones across distances. And now we get to the electronic stage where now you could open an account online and start trading for yourself. So this is where the wall starts falling. So from 1996, it opened a very competitive market where various Forex brokers would offer different products to different parts of the world. Through licensing and regulation, people would be able to access global financial markets. And this is when some of the earliest investors in Kenya and in Africa were able to access global markets. I was watching most recent interview of Aliko Dangote. He is arguably the richest man on the planet right now, right? So this guy started his career by trading, okay? He started his career by trading. It's around the same period where he could be able to access global markets from the comfort of his computer. So today, you as a Kenyan or working or living in Kenya, you have the rare opportunity to access the global Forex market from the comfort of your phone. So you're able to do this under a system of regulation, a framework created by the Capital Markets Authority of Kenya in order to protect you as a trader. Then fast forward, 2009, some guy invents some internet money, right? He decided, no, we don't need any more physical cash. Let's go online. So Bitcoin shows up in 2009. Some anonymous person, possibly a committee, possibly a cat walking on a keyboard. He publishes a paper saying, what if money didn't need a government? And this was the rise of cryptocurrencies, okay? So today we can't talk about trading and investing without mentioning cryptocurrencies. So suddenly, Forex isn't just dollar trading against the yen, euro against the pound anymore. So we also have dollar trading against BTC, we have ETH, we have USDT, and 40,000 coins named after dogs. The line between foreign exchange and this thing my cousin won't shut up about gets very furry, right? So right now, whenever we talk of Forex, if I need to send some cash today, let's say I need to send some cash to some guy in Nigeria. The easiest way for me to do it today is using crypto, okay? So now those currencies are becoming mainstream. So if somebody wanted to pay me $10 today, let's say they're in US, if I used Western Union, I would receive $2 after paying the fees, right? But then with crypto, they can send me $10 and I receive $10 instantly on my wallet on my phone, okay? So those currencies are becoming part of our near future, okay? So whatever you do as you study Forex, don't ignore the crypto market. Fair warning to you guys, Forex comes with something called leverage. So leverage is a monster, okay? Leverage is something that has finished many Forex traders' careers because it basically means trading using borrowed money. So you can basically trade up to 400 times the amount you have deposited in your trading account, okay? So if you deposit $100 with a broker, and then you get 1:10 leverage, usually as a ratio, then you can buy shares worth $1,000, okay? So if those shares start going down in price, just a 10% price drop will wipe you out of the market, okay? But then, if the price of that share goes up by 10%, your account would be up 100%. You'll have doubled the amount you deposited. So leverage is very dangerous, but also very fruitful when you're on the winning side. So if you decide to get into the Forex market, make sure that you learn and understand leverage. Regulated retail Forex. This is a boring but beautiful safety net. First things first, CMA licensed brokers in Kenya. We are 10 so far, okay? So there's only 10 brokers that are licensed by the Capital Markets Authority of Kenya, okay? That could change tomorrow. Maybe we could get to 11. If you're trading with a Forex broker and they are not licensed and regulated in Kenya, if they happen to do some shit, because they can, if something happens and tomorrow morning your balance is 0, or you can't log into the website, there's no way of reaching out to them and getting things sorted, okay? But if you're operating under a broker that is licensed and regulated in Kenya, they risk losing their license over your $1,000 account, okay? Do you think they would want to lose their license because of your $1,000 account? Yeah, so they give you the best treatment, okay? And because they are competing with each other, if those guys have a bad name because of mistreating their clients, then clients move to this other broker, okay? So competition between brokers is good because it's healthy for the traders and investors. Does it make sense? So second, leverage caps that protect you. They are limited as to how much leverage they can offer. So CMA only allows brokers in Kenya to offer up to 400:1 on currencies. 3, segregated client funds, okay? So when you deposit money to your trading account with your broker, the account that receives that money is monitored by CMA and is separate from your broker's accounts, okay? This means that the broker you are trading with could go broke and you still have your money in your account, okay? So the client's funds are not broker's funds, okay? So they are required by law to have segregated accounts, and these accounts are closely monitored by the CMA. So if you are trading in, let's say, with FX Pesa, if FX Pesa ever goes broke, your money will still be in your account, okay? They don't have access to that money. So last 3 are negative balance protection. We know that you could lose everything. Back in the day, your account would go negative. If you traded badly and the market went against you, your account could go to negative $100. But now today, you have negative balance protection, so your account can never go negative. So here is where Gen Z joins the chat, right? AI just joined the trading desk, okay? So most of the research that was considered to be premium, quant, guys from Asia doing math, okay? Now, from a $20 crowd, you can do all kinds of computations using AI to analyze literally any markets in this world and have the results even before Goldman Sachs clicks their first button in the morning, okay? So as long as you have an AI agent, an AI chatbot, you know how to use it, you can analyze records and records of data. You can analyze the entire SP500 history and look at trends, seasonality, everything. If you are looking at how do I compare between 2 stocks, okay? You can learn about that using an AI program. There is already AI platforms that are designed to help you as a trader to analyze data, to analyze trades, to look at chart patterns. So everything that guys were, I would say, charging $1,000 to teach you, it's available on AI bots, okay? So why would you pay someone $1,000 to learn about trading when you could just pay a $20 AI chatbot and then ask it all kinds of questions, do further research than anybody else, and get premium knowledge because AI gets its knowledge from a wider number of traders, right? So this is your opportunity. With AI as a tutor, automated trading EAs, you can generate instantly. News and sentiment analysis, you can do it in real time, okay? Like you can scan across different websites. Let's say Twitter, you can do Facebook, Instagram, TikTok. And this AI agent will basically tell you that today there's a higher number of people, let's say 50 million people, who are talking about this talk, okay? And this way you can tell what sentiment is in the market. So Kenya, and where do we stand in the FX story or the global FX story? So I already told you that you participate in the market, but you don't get paid for it, right? So first, the diaspora remittances as of last year, we had $5.04 billion, okay? This is the amount that people sent back to Kenya, okay? Second, the exchange rate. I would say a big shout out to the CBK Governor Kamau. He has maintained a very stable exchange rate of 129.5 since August 2024, right? So a stable exchange rate makes sure that everyone is at peace. You can price your goods and services accordingly. Three, we have 10 CMA licensed Forex brokers. Congrats to CMA. And lastly, Kenya was the first frontier market to regulate, okay? So most other African countries don't have the same regulations we have. So by being fast or having the fast mover advantage, we have been able to create a huge community of traders in Kenya. And that explains why we have become very attractive to scammers, okay? Does it make sense? We were the first to regulate, and now we have become very attractive to scammers. So I will explain. Tell me an industry without money, tell me an industry with money that doesn't have scammers. Let's start with what some of our richest guys are doing, right? Some of the richest guys in Kenya are into real estate, right? Mashamba, right? Mashamba. Brought, right? Are there scammers there? Are they stealing millions or billions per year? Right? Which other industry has money? Energy, right? Telecom, crypto. How many people have crypto or have bought crypto before? Kuna pesa huko? Hey guys, hakuna pesa huko. Hakuna pesa huko. Crypto hakuna pesa, right? Right? Hakuna pesa huko, msidanganywe, hakuna pesa. Most of the participants in the market end up losing money, okay? So if you're looking into crypto, look at Bitcoin, okay? Perhaps Bitcoin, you'll be able to hold some value. But as soon as you get into some of these dog coins, AI coins, you're most likely going to end up losing money, okay? And you'll come back here with a lot of experience and a free crypto trading course, right? So if you actually want to try this, I'll give you 5 simple steps. One, first of all, you educate yourself and then trade, okay? Educate and then trade. So you have to learn what Forex trading is. We have free resources at FX Pesa. We have a course called Novice to Pro. We have the Bullish Banter podcast, which is purely educational. We have the FX Pesa Academy, where we offer free Zoom classes, where you have an actual expert you can interact with. So those are resources we provide. So spend 60 days learning before you deposit a single shilling. Demo accounts are free. So we have these paper trading accounts where you can trade on virtual money, not real money. So as you learn the concepts, you practice on the real markets, but not real money, until you learn the concepts. And once you learn, now you can decide to trade your own money. So here's the second step, okay? Very important. Choose a CMA regulated broker only, okay? Don't go for foreign brokers. They will mess you up, okay? We have been there. I started trading in the year 2013. So I've traded without foreign brokers before we got licensing in Kenya. So we used to go through a lot of stuff. Mara spreads have widened. Mara you can't access your money. Mara sijui nini. PayPal wanaingilia hapo katikati, pesa imehang 180 days. So all these things happened to us, but we survived. So choose a CMA regulated broker. 3, start embarrassingly small, okay? So if this is your first time trading and you have 10 million shillings in your savings account, start embarrassingly small, okay? Maybe even start with $50, $100, okay? You just want to learn how this skill works. Focus on the process. So I know working for a broker, it goes against our best interest. We would want you to deposit a big amount of money and then trade, we make money, you make money. But then if you don't have the skill, we lose a long-term client, okay? If you come deposit $1,000 and then you lose it in the markets tomorrow, we have lost a client. And we have got another fan out there who is saying Forex trading is a scam, right? But then follow the process, okay? If you learn and then you start embarrassing the small, you are able to build, okay? It's only a grave where we start from the top going down, right? But then, if it's Forex trading, you have to put in the work, learn those skills, trade small accounts. Once you feel like you are getting it, start moving higher, okay? It's like graduating from driving school, right? Once you graduate, are you taking the next trip to Rwanda? Yeah? Are you taking the demo to Rwanda? No, you start small. You move around the estate, you come back home, you're like, I'm getting it, right? So next time, you're like, let me get to the market, grab a few things, I come back, hey, Gary, go safe. It's good, right? So by the time you start taking those long-term trips, you have done the short-term trips, okay? That's the same way you do it with Forex. So risk, this is another big monster, right? If you have been to Instagram Forex, right? No risk, no Ferrari, right? Right? No risk, no Ferrari, right? Right? 0.01 lots won't buy you a ride, right? So there's all these terminologies that I use to encourage you to take more risks, okay? Don't be stupid, okay? And this is not an insult. Don't be stupid. Don't take risks that take you into some level of a gambler, okay? So think about it this way. A very simple question to you guys, right? If you lost $10 right now, okay, and you have a drink on your table, would that drink change its taste? Okay, let's up the numbers. 100. You look at your phone right now, $100 are gone. That's 13K. Is your drink still tasting the same? 200. 500. Okay, $1,000. Have you broken the smartphone? Or have you requested for another one? I'm Zinga. So the thing is, there's a central point in between that $1 and maybe $1 million where your drink would change the taste, okay? That's your risk appetite, okay? So if your drink would change the taste, then anything above that is above your risk appetite, okay? This means you can't handle that kind of risk, okay? And this varies from person to person, right? If you had If you had George Ruto sitting right here, right? If he lost $1,000, would his drink change the taste? Right? So, like, it depends. If it's Dangote and it's $1 million, he would continue enjoying his drink, okay? So, your risk appetite varies from person to person. It also varies with age, like all these kinds of factors. But I've shown you a very simple trick to understand it. So, risk within your risk appetite, okay? So 1% for me might not be 1% for you. Lastly, journal everything, okay? In order to learn in Forex, you have to know where you have come from, okay? Journaling your trade is very important, okay? So the most important thing about journaling your trades is one very simple question, okay? If you made some money, you want to know, what the fuck was I thinking? Okay? If you lost some money, you want to know, what the fuck was I thinking? Okay? Were you stressed? Okay? Were you trying to squeeze in some more money? Were you being greedy? Were you being fearful? Okay? In fact, the trading platform has records for all your trades. So if you want to know where you entered, where you exited, all those records are there. The record that is not there, what the fuck were you thinking when you did that? Okay? So, lastly, as we approach the end, From a goat to a bench, to a pip on your phone, the door has been opened. Whether you walk through it is up to you. The market doesn't care who your father is. That, my friends, is the most beautiful thing about Forex. Thank you.